Welcome, I'm Walter Peters, and you're here at the Naked Trading Session. Alright, so I want to talk about what's been going on recently. The big story, obviously, is that people have been flying to the U.S. dollar, which has been a big question for me when things like this happen. Is it gonna, where's the trading opportunity going to show up? And I think we're pretty close. I would suspect that we're going to probably see something interesting right around this area. And for those of you that have not been here before to this session, let me explain a little bit basically what I do. So if you haven't been here before, then maybe you don't know, but basically what I do is I work off support and resistance zones. And that's what you see drawn here on this chart. So on this euro here, what I have are all those levels identified by these dashed lines where a price is basically turned around repeatedly. So once I find those spots in the chart, I mark them and I wait for the market to get there. And I don't expect the market to turn around as soon as it gets no charts. Right, okay. So this is basically what I do when I talk about naked trading. I'll draw my support and resistance zones on the chart, and then I'll wait for the market to get there. And that's basically it. I wait for the market to get there. Now, I don't expect the market to reverse. If the market comes down, like if the euro gets all the way down here to 34.40, which is where I have my zone drawn. But remember, it's a beer belly, right? It's not a wall. So I don't expect the market to just hit this wall and then have trouble getting through it and then reverse immediately. It's a bit squishy. It's a little bit soft, and so the market may push into it. It may get beyond it. Like we had this reversal right here, which is a brilliant setup. Here, whoops, this one. We may see something like that here as well. This turnaround right here to me was a valid setup. So this, I don't have anything just yet, but when I get something good, I'll know because I'll have a pattern to reverse. And let me talk about our reversal type patterns. There's several. So now, if you've been here before, you know that there are a couple of different setups that we like to use. First of all, we have to make sure our zones are drawn right. So the easiest way to do that, if you haven't done this a lot, if it's something that's new to you, if it's not natural, the easiest way to do this is just to move to a line chart. Select line chart if you got your MetaTrader open, and then put your lines, your zones, at those areas where you see these bends over and over again. So we've got one right here. We have two bends here. We've got one there. We've got another one from the other side here. So we've got support, 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 a little bit of resistance there, some more support and some support, and then again resistance right there. So we've seen that, so that's clearly a zone there. So once we have all of our zones set up, I wait for a nice turnaround, a nice set up like a kangaroo tail or a big shadow. Can anyone here tell me what a kangaroo tail is? What is a kangaroo tail? What's it look like? Kangaroo tails are one of my favorites. Doji, no idea, Stumpy. A hook, a pin bar, yeah. Okay, so kangaroo tail is a reversal. It goes by other names. Some people call them pin bars. Some people call them dojis. But for me, there's specific rules that are associated with them. And I need to have all of these characteristics of my kangaroo tail for me to take the trade. So let's see. This is the 4-hour chart here. we had a really good one actually on the Aussie yen recently. And let's go back to it. So this Aussie yen has all of our characteristics that we're looking for in a kangaroo tail. First of all, the open and the close of it's this bar right here. Okay? The open and the close are in the top third of the bar. The open and the close are inside the previous bar's range. And the previous bar's range would be from the high to the low. So the open and the close are inside there. If I'll give you a book if you want the rules for this. If you don't have the rules, I'll give you a book for that. Now, what also needs to happen is it needs to print on a zone, and ideally, the kangaroo tail will penetrate the zone like this one did. See how the kangaroo tail went through the zone? That is ideal. The next bar will trade higher than the kangaroo tail if it's a bullish one like this one. And that will trigger the buy stop. So my buy stop goes here. My stop loss goes down here. Now, let's talk a little bit today about stops because I think people sometimes are confused about, this was a pretty far stop. It was a long kangaroo tail. If you remember, when this bar occurred about a month ago, the world was falling apart and everyone was freaking out. So we had this kangaroo tail that was 353 pips long, right? That's pretty long. So if I put my stop all the way down here, I've got 353 pips of risk. Now, where am I going to take profit? I'm probably going to take profit at the next available zone. If the zone is really close, like this one was, the zone was only about 57 pips away from my entry, then I might wait for a further zone. I might wait for it to go even further. Now, that may have been up here. However, you'll notice that what happened here is the market traded higher, got to the first zone, fell, came back up, got to that first zone again, broke through, came up here, fell back down to the zone, touched it, and then came back up, and sort of made a double top up here and then fell. Now, I probably, if I look back in time, probably could have made a case for a zone being back here where there was another kangaroo tail in the same spot, right here. So I probably should have had this one drawn. The only tricky part is look at this right here, the sloppy price action around this zone here. So I probably need to do my line chart trick and make sure that I have it drawn right in the right spot. And I probably do something like that. And the reason I've moved it down a bit is to capture these two touches as support and these two touches as resistance. Okay? And that also captures this sort of double top action there. Now, here's the principle I want to get across because I think some people get a little bit put off by some kangaroo tails thinking that the stop's too far or something like that. What I would like to do is show you exactly how I trade these because some traders will tell you that you should only take a trade if your reward to risk is so much. So if you're risking $1 to make $2, or if you're risking $1 to make $3, or whatever. It's actually not that simple. Profitable trading is going to occur if you have a couple of things in order. It's a complex formula, right? There's basically your win rate, and there's basically your average win and your average loss size. And those all interact. So you can have really big losers if you win very often, right? And a lot of people know this. If I have an 85% win rate, I can afford to have my losers be twice as big as my winners on average. And likewise, if I have a really low win rate, if I have a 37% win rate, that's okay if my average winner is 3 times bigger than my average loser, right? If I'm gaining $3 for every $1 I lose, even though I'm losing, 63% of the time, it's okay. So there's a complex interaction there. So first of all, let's point that out. That basically, if we're looking at trading, we don't always have to make sure that our winners are bigger than our losers. It's nice, but it's not necessary. And I think some people will tell you that it's necessary. And it's not really that necessary. It depends on your win rate because there's an interaction there. The other thing that's important to note is that I don't, just because I have my stop loss down here, so I'm going to put my stop loss, I'm going to take this trade and put my stop loss down here, right, on the other side of the tail. My buy stop is above the bar, right here, right? And guess what? If the market goes against me and goes close to my stop, I'm going to get out of the trade before it hits my stop loss. That's my emergency stop. You know, if it hits while I'm sleeping or I'm away from a computer or I'm on a plane or, you know, I'm brushing my teeth or, you know, at dance class or whatever, that's what the emergency stop loss is for, is if I can't get there and get out, right? So it's a worst case scenario. But most of the time, I'm actually going to get out long before that. In fact, let me show you an example in just a minute of a trade that I got out of. It was a losing trade, and I got out before the stop was hit. And I'll show you why. Because it's very similar to this kangaroo tail. Okay, so this kangaroo tail triggered on the very next bar, and then it fell back down to our zone down here, and it closed down there. So that was okay with me. It was okay that it did this much of a drawdown. Why? Because it didn't go beyond my zone. Now, if it started trading down in this area down here, so in other words, if it traded and closed, especially if it closed another 90 pips lower, then I probably would have dumped it. I probably wouldn't have waited for it to get all the way down here. And then the next bar trades higher, and then boom, it hits our first zone, comes back down, then hits another spot up here. Now, over here, let's say we're waiting for it to hit this area up here, this zone up here. Let's say that was the ultimate target. The hope was that it was going to hit this area up here. And then after this, it fell, and it came back up, and then did this bar right here. I probably would have dumped it after this one. And the reason why is I'm using the market's information. So it would have only been a 95 pip winner after the close of that bar. It sort of double topped up there. The reason why is I think it's important for us as traders to use the market's information. What is the market telling us? When the market came here and hit it and then fell and then hit it again, that sort of looked like a double top, and it still does. And so we need to use that information as traders to manage our trades. Now, it's great if everything goes according to plan, but if things start to fall apart, it's important for us to be, you know, agile and being, you know, to be able to get out. Let me show you an example of a losing kangaroo tail that I just took recently. And I think it's really interesting because I think it sort of shows this principle here that I'm talking about, using the market's information and also making sure that, you know, I don't take the full loss. All right. So this is, you're looking at a silver chart here. And I've got a zone drawn right here because of these touches right here. And this is a real trade, by the way. It's a real trade. It's a trade just closed, you know, I'm not sure, probably about 7 hours ago or something like that. All right, so, and this is a real losing trade. I think it's important for us to not always look at the winners, right? It's important to look at the losers as well. Okay, so the kangaroo tail right here, and you can see the open and the closure on the previous bar's range. The very next bar trades higher. It's on a zone here, and it's got a little bit of space. For those of you that haven't been around, the space thing is that I like to see a lot of the kangaroo tail trade in an area that the market hasn't recently traded. Now, it's always tricky when you're going with the dominant move, like this kangaroo tail is sort of going with the up move. So because we've been in a recent up move, our kangaroo tail is going to have so much space. Whereas when we get reversal setups, our kangaroo tails, like here's another one. Oops. Here's another kangaroo tail with the dominant trend down here, this one. So it's not going to have a lot of room to the left, a lot of space. But sometimes your reversal type kangaroo tails will, like this one up here. Now this isn't really on the zone. It doesn't really fit all the rules. But as an example, this is the type of kangaroo tail that's a reversal one. Where I look to the left, I don't see any bars that are printed in this area where the bar has. That's really good. So that's a lot of space on that one. But these aren't going to have that because they're going the same direction. Now, so I took this trade. I waited for it to trigger, went higher, went up, it went higher, came back down. The next day, it went higher again, and then closed back down. Now, what I've noticed over those two bars is that we have what I would call a minor support and resistance zone right here. And the reason I say that is because all of these bars here had difficulty getting through there. So a minor zone is just a support and resistance zone on a lower time frame. So if we get into the 4-hour chart, you'll see what I mean. That all of these bars here had a lot of difficulty getting through this level. Let's go to that 4-hour chart and look. It's right here. So it shows up right here. So that's that same thing. Okay? So now, I'm in my trade. I've seen 2 days occur. And I've seen where this area here has served as support. And I look to the left and I see why. I go, okay, well, all these bars are right there. And even these bars closed up there as well. So I said, okay, that's why they're finding support here. So I said to myself, as long as the market stays above this zone here and it stays as support, I'm willing to hold this trade. But as soon as the market falls beyond this level and starts traveling towards my stop, I'm going to get out. And why is that? The reason why is because I want my average loser to be smaller than the other side of the kangaroo tail. So I'm always willing to get out before my stop is hit. And that's exactly what happened here. I waited for the market to get down to about this level down here, and then I dumped it. Once it got down to this, where this zone is drawn right here, I dumped it. And if you look here's a 1-hour chart. So once it got to, like, say, this area right here, it was about 7 or 8 hours ago. So 1, 2, 3, 4, 5, 6, 7, yeah. So it would have been right here when the market broke through on this bar right here. But I said, you know what? I'm done. It's going far further than I would like. Even though my stop was all the way down here, I was willing to get out before my stop was hit. And I think as traders, it's important for us to recognize that when we're not right, we save ourselves a lot of money by being more nimble. And I do that by setting alerts and things like that. So I'll have an alert set up so that if the market goes to a certain level, it sends an email to my phone and wakes me up, or, alerts me if I'm away from the computer that I should get out of the trade and that sort of thing. So hopefully that's something that that we can do to reduce our stops, our average losers. Nimble. Lisa loves nimble. All right, are there any charts you'd like to look at? We can look at some of the charts that are right now happening. One interesting one is the euro yen. It looks like the euro yen might want to print a kangaroo tail today, which would be great. But it needs to close much higher, and we've only got about an hour and a half left. So it doesn't look, it may happen still. We've got an hour and a half for the euro to close up here. If it did that, the euro yen, if it did that, that would be a really nice kangaroo tail in my book. What else, guys? Any other charts? Any requests? Gold. Ooh, I'll do that. All right. So, you know what? I don't know if any of you were here in the Euro Swiss. Okay. Okay, we've got several here. Okay. Arachiga wants to look at gold. I don't know if you were here, but there was another webinar we did. Well, let's see. It was back in 24th of August. So it was. I think it was August 24th. And we had this big shadow here on this bar. And we actually looked at gold. And I mentioned to everyone that was at that webinar, I said, we had this big shadow here. And I said, look, although the gold's going to trade down, I'd be looking at possibly taking a trade down here at this level. And I said, especially if it gives us a big shadow or a kangaroo tail. And bam, it gave us a great kangaroo tail. That is a brilliant one right there. And of course, it traveled back up to the same level that it hit before. And then since then, it's been down. So as far as gold is concerned, I would be waiting again for it to come down here, just like I said back then. I thought that was pretty funny when we were talking about that, and then the very next day we saw this kangaroo tail. So that was really cool. This kangaroo tail. Let's look at it. It has all the things that we like in a kangaroo tail. Open, the close, or the top third of the bar. The very next bar trades higher. The open, the close are inside the previous bar's range. And we've got some space, right? We've got some room to the left. Even though this is with the trend, a lot of this kangaroo tail has printed in an area that hasn't seen the market print before recently. See? All that space right there. So yeah, that was a really good one. But right now we don't have any. Minaj asked if you'd use euro. Minaj says, look, the euro's at 10-year lows. Would you use levels even from 10 years ago? And the answer is definitely yes. I think it's, these levels are like good wine. They just get better. And you can see that, like in the euro, we were just looking at the euro, but do you recall this touch right here? This touch right here on the euro, this is just a real quick, that touch occurred in 2010. 7 years ago, the euro topped out at that same exact level. So this is the euro falling, right, for days and days and days. And where it finally finds bottom was 2003 high levels. And I'll show you real quickly. So that's 119, right? 119.02. You go back to 2003, and I remember actually because I was trading it back in. And there you go. It made it sort of a triple top at that same level, 1902 right there. And then it came up again and again. But the point is that the charts do have a memory. So it's really interesting that they do, but they do. Okay. So, Arachiga, to answer your question on gold, I'm just still waiting. I'd love for it to get down here again and give us something nice. But it doesn't look like it's headed up anytime soon. It looks like it's still sort of in retrace mode. Euro Swiss. Okay, let's back it up here. Oh, this is great. This is a great chart. On the Euro Swiss, Arachiga says, do you only take kangaroos on daily? What other patterns? We've got lots of other patterns. Maybe next time we'll talk about a good one. Maybe next time we'll talk about another one if you want, Arachiga, at the next webinar. But big shadows and kangaroo tails are the easiest to understand. I've got the free ebooks for those of you that want to learn about them, and they're really robust. I love them. So on the Euro Swiss, this is another really cool principle I like to show, and that's the one where resistance becomes support, and that's basically what we're getting here. What's going to happen? I would not be shocked at all if the Euro Swiss, first of all, we got a big shadow up here, but it's not really, I don't really have a zone drawn here, but I should have some lines drawn up here, like one up here, which captures these highs. What looks like is going to occur is something that happens all the time, which is, you guys just need to email me if you want the book, right? So that's all you really have to do, just email me. Yeah, there you go. If you want the books. You get the Big Shadow book, the Kangaroo Tail book. There you go. All right. So this is what's going to happen, guys. The market's going to come down to this level, 118.50, and I would not be shocked if it gave us a nice buy signal there. And that's just the sort of thing that it does all the time where, resistance becomes support. So this was once resistance up here where the market came up here and fell. It's blown through that level on the Euro Swiss. Now it's going to come down here. And it may come down here and then fall through it. But what's more likely to happen is it will come down here, give us a nice buy signal, and then trade all the way up to here. So that's my
best guesstimate on the Euro Swiss. That sort of thing happens all the time. Yeah, Andy, it's Walter at fxjake.com. I wouldn't short now, Jason. I definitely wouldn't short now. If I were interested in trading the Euro Swiss, what I would do is I would just wait for it to get down here. If it gives us a nice kangaroo tail, then I would buy it down here. That's what I would do, or a big shadow, and it may occur on the 4-hour chart, right? They're saying that Michael says the Swiss bank says it would protect 120. Well, that's great, but according to the chart here, I mean, we might adjust it like this. And maybe look, we've got a kangaroo tail right here on the sell signal right up here. I might adjust it to 1886 or something like that, but that's where I've got my zone drawn right there. That's where I'm looking for a buy signal. I'd like to see the market come down here, penetrate this level, and then give us a nice buy signal. That's what I would like to do. Minaj says when central banks intervene, do technicals break down? For me, they don't. They just speed things up. So generally speaking, what I see happen when I see things like banks interventions, and you've seen this over years and years in Japan with the yen. What ends up happening usually is that it just speeds up the move from zone to zone. That's all. And P.S. by the way, last time a bank tried this, the Bank of Japan's famous for this, right? What happened? Let's look and see what happened last time the Bank of Japan tried. But didn't they do something like right here? Wasn't this giant bar right here a intervention? I think it was. And let's see, how long did that last? Yeah. Okay, so that went, so we got 280 pips or whatever, and then a couple days later, it's all gone. So, although governments like to think that they can affect economies, unfortunately, it's usually only brief. And, sometimes it lasts longer than that. You can go back on this pair. You can go back on the dollar yen and see other spots where this happened. They used to be very aggressive, and they used to hold it for times, and then what would happen is the market would finally break out and go well beyond where the Bank of Japan wanted to go. And they were upset. But the fact is the market is going to go where the market's going to go. Governments can only retard it for a little bit. So I think the Bank of Japan, yes, Minaj, I think the Bank of Japan historically has actually given a level, and someone can correct me if I'm wrong, but I think it was 79 or 80 that the Bank of Japan has specifically said we don't want our currency to get lower than that. I think so, yeah. Maybe it was 90. I can't remember, but it was I think it was 80 or 90 or 79 or 89 or something like that. If you look back historically, it sort of found some, was it 80? Yeah, Michael says it was 80. Yeah. So there you go. So it has happened in the past. To answer your question, Minaj. Yep. All right. So that's the Euro Swiss. So I think that's a great chart. I'm glad we're talking about the Euro Swiss. I think that if the Euro Swiss came down to my zone and gave me a nice buy signal, I think that would be a great thing to do. Just based on what it looks like. Now, if it falls through there and keeps looking bearish, then there's no reason to buy it. And I'm certainly not going to buy it on what a bank does because that's just not my style. I like to look at the chart and let the chart tell the story. What is the email is Walter at fxjake.com if you want the ebook. Okay. Free for everyone, right? All right, so what are the other ones we want to look at here? The Kiwi. Okay, let's look at the Kiwi. I don't think the Kiwi chart's that interesting right now. Oh, whoa. Was I wrong? I didn't look at it today. I'm in sleeping before I got here to meet up with you folks. All right, well, I'm glad we're looking at the Kiwi. This is actually one of the most interesting charts I've seen in a long time. If the Kiwi closes where it is right now, it's going to give us a kangaroo tail. It's going to give us a brilliant buy signal. I'd be interested in putting my buy stop right here at 82.44. I'd put my stop loss down here at 81.12. And the first target's probably going to be up in this area around 83.56. And that's because these bars have had difficulty getting through there. You can see it's a bit of a minor zone where we've seen some resistance here. We've seen some resistance here. Right there. And we've seen some resistance right about here. So, and obviously there's some more here. I mean, we probably could even maybe draw a zone here. Maybe it's not a minor zone. Maybe it's a major zone. Yeah, it looks pretty major to me. Let me do that. So I would put my level right about here. And you can see that captures this fall. It captures this support, this resistance, that resistance, that resistance. And it doesn't quite capture this one, which is a bummer because the tails are so long. So if the Kiwi closes inside the previous bar's range, and it looks like it's flirting with doing that, then I would be interested in a buy signal on the Kiwi. So thank you very much, Floyd. That's a great chart. I'm glad you showed us that one. CAD Yen. Next up is CAD Yen. We don't know what causes the kangaroo tail, Solomon. We don't know. I just trade them. I'm not a very good fundamental trader. Ooh, boy, you guys really want to pick the kangaroo tail today, don't you? This is great. Cool. I'm really glad that Vinay wants to look at the CAD Yen. So what I'm doing here is I'm just drawing my zones, that extreme highs, extreme lows, and those spots where the chart's repeatedly reversed. Wow, CAD Yen looks good. Okay, so I'm back on my line chart here to make sure I get these drawn. Yep. Okay. Now what I've done here, the reason I'm drawing a zone here is there's support here, support, a little bit of resistance, a little bit of support, another support back there. So here's my CAD Yen, and it doesn't matter if the kangaroo tail is the same color or different Arichiga. It doesn't really matter. Okay, guys, let's all thank Vinay for, I hope I'm pronouncing your name correctly, for this one, because this is a great one, just like the last one. So we've got two really interesting ones. Now again, the day hasn't closed yet on my chart. It won't close for another hour and a half. But basically, I'd be interested in taking a buy on the CAD Yen if it closes like this, around 77.83. My stop goes down here at 76.60. The first likely target, unfortunately, is only going to be about 98 pips away at 78.78, right there. But then after that, it's actually free flowing all the way. If it breaks that, then it can go all the way to where these bar lows are here, which is another 120 pips away, around this level right here. Right here. Right there. So I've got two targets. I've got a target here at 79.88, and I've got a target here of 78.73. And again, my buy stop's going to be just above it, around 77.80 or so. My stop loss goes down here. So that's the CAD Yen. Minaj says another CAD pair, the dollar CAD, also printed the kangaroo tail in significant zone. Would you factor this in your analysis? No, not really. I treat them separately. I consider all these trades, all these markets separate. So I don't, like if one shows something or whatever, I don't like, I mean, sometimes it's kind of cool to do that, but I think you can drive yourself crazy when you say, well, if the dollar CAD's doing this and the dollar yen's doing that, then the CAD yen should do that. Well, it's just easier for me to treat them separately. But let's look at the CAD and see what Minaj is talking about. Yeah. I would be this one's a bit tricky though, because it almost looks like the kangaroo tail's up beyond the zone. So it could be that we have a nice kangaroo tail here, but as I have my zone drawn, it almost looks like it's on top of it, which wouldn't be ideal. because that sort of suggests a breakout. And this is the tricky part for some people, is the market might go beyond a zone, come back down, touch it, and then keep going. Kind of like our Euro Swiss. Compare this chart to the Euro Swiss. So if the market has broken out beyond this zone and has just come back to make a retouch here, it might just keep going. And that's sort of similar to what I was talking about on the Euro Swiss here, where the market's gone beyond the zone, come back down, and may retouch it here, and then keep going, right? So I'd be careful with that one. I don't have any explanation as to why the charts have long memories, Manoj. I just want to make sure we get all the questions here. Yeah, I would trade them both, but I like the CAD yen better. I'm worried that the CAD is showing something weird, right? Colin says, why do you put your entry above the kangaroo bar instead of waiting for a better price? The reason why, Colin, is backtesting has shown me that if I take a retrace entry, I'm always going to get the loser. I'm always going to get a losing trade. Let's think about this for a second. If this kangaroo tail here, tomorrow, right, when the next bar starts printing, if it just falls like a brick and keeps going for like 300 pips, it probably won't trade above the high. Now, sometimes it will, but if you look at losing kangaroo tails, what you'll notice, and what I've noticed in my testing, is that they often don't break above the high on a bullish one. It's only the good ones that do. So what I'm trying to do is avoid the losing trade. If I can avoid the losers by waiting for the market to go in the expected direction before entering, then I'm okay. Here's the kangaroo tail here. Oh, this one doesn't qualify because it's not inside the previous bar's range. But here's another one right here. You can see it did trade higher, came back down, retraced, and then rocketed up. But the reason why I wait for the market to go in the expected direction is because I know that most traders are going to add to losing trades. So when a trade goes against them, they add more and more and more because it's a cheaper position, right? If the trade was good at this price, it's even better at that price. Well, I kind of don't like to do that. I like to do the opposite. If the trade's going my way, I'll add some maybe. But if it's going the wrong way, I don't want to get in it. So I'm waiting for the market to tell me that I'm right. That's why I use those buy stops. Yeah. What else? No, it's a great question, Colin. It comes up all the time. Solomon, I do base the buy on the bar after the kangaroo. So on the CAD yen, the next bar, right, has to trade higher. And ideally, and here's another tip, you guys, ideally that will trigger during the Europe or New York session. Ideally, I don't want to see the CAD yen trade higher during the Asian session. I mean, it is a yen pair, so you will see some movement sometimes on the yen pairs, but ideally, I like to see the market push through that level with some momentum. And that usually means Europe or New York. A buy stop is different from a buy limit fee fib. Fee fib is asking about buy stops and buy limits. I'll show you. Let's take a trade. See how it says buy stop here at A415 or sell limit? A buy stop is basically saying the market has to go higher to trigger my trade. It has to go higher than it is right now. So a buy stop, if I put my buy stop at 77.75, let's go 77 to 80. So I put my buy stop at 77 to 80, right? Like that. That's a buy stop. And my stop loss is going to go down below the low, down here, at 76.63, we'll call it. So that's all. That's what a buy stop is. A buy stop is just saying the price has to go higher than it is right now. Whoa. Why is I like to, Arichiga, I like to put my buy stop, basically I like to put my buy stop at, during the Asian session, like sort of the end of the Asian session, I'll put it in, yeah. Yeah. So basically that's how the buy stop works. Now a buy limit is going to be a retrace. So if I say I want to get in if the market comes down to this zone down here at 77.17, that would be a buy limit, right? That's the difference. Yeah. Michael's asking about the congestion on the CAD yen. Would I think that this congestion on the CAD yen adds to my affects my thinking or something? Not really. I mean, this kangaroo tail does have a little bit of space, Michael. So it does kind of stink that it's in an area where you're saying there's a lot of congestion. But look, going all the way back to this bar. So this much of the kangaroo tail printed in an area that it hasn't printed in some time, right? So that's good. Excuse me. That's something I like about this. Is that I have to go back all the way to, let's see here. How far back did it go? Yeah, 16 trading days before we see the market trade on the bottom part of this kangaroo tail. So that's good to see. That means it has some space. Arachiga, no. If I enter at a better price, I am guaranteed to get on every losing trade. Okay, the reason why I use a buy stop on this one is because if I get on a retrace and the market falls, then I'm in on every single loser. If I get on a buy stop and the market falls, I'm going to avoid a lot of losers. That's why I do that. That's the only reason why. That's it. Because when we think about it this way, if the market is going to fall and go lower and lower and lower, right? Then it may not ever break out beyond today's high. Whereas if the market's going to go higher and trade higher and higher and higher, it definitely will take out today's high. So that's why. That's why I do that. The reason why I use buy stops or sell stops for sell kangaroo tail is to avoid losing trades. Wouldn't you enter on Asia? Okay. Vinay says, regarding placing your order, when do you put your order? Because after the New York close, there's more spreads. There's a chance of a false breakout. Yeah. So Vinay, if you live in New York, Vinay, I don't know where you live. Let's say you live in New York, okay? If you live in New York and you use my charts, they close at 5 p.m. New York time. Pretty standard time. Vinay lives in India. Okay, well, it's a little bit tricky then. So at 5 p.m. New York time, right, the market closes, and I can say, well, I'm interested in buying the CAD yen, but I'm not going to do it just yet. I'll put my order in before I go to sleep. So if I'm in New York and I go to bed at 10 o'clock or 11 o'clock, I'll put my order in then, you know? And that's going to be toward the latter end, the ending part of the Asian session, so that my order's in by the time Europe wakes up and starts trading. So that's what I do. So let's say, 6 hours into the Asian session, I'll put my order in. That's what I'll generally do. You will miss out on some of the yen pairs will move during the Asian session. You'll miss out on some of those trades. But generally speaking, I don't want to see it click into my trade immediately during the Asian session. I want to see it happen during the Europe or New York session with some momentum. There was more volume during that time, right? During those markets. Asian session doesn't have a whole lot of volume, really. So that's why I like to do that. All right. Are there any other charts that we didn't look at? I hope. One more. Okay, so there's a Kiwi. I don't think I have a Kiwi yen trade. Oh, you know what, you guys? I wanted to look at. See, I don't have a Kiwi yen on here, which is unfortunate. Maybe I can get another. Let me bring up another chart here if we have time, really quickly. Yeah, you see the oil chart? Okay, cool. This is a 6-hour oil chart, but what's cool about it is it printed a kangaroo tail down here. Let me zoom in so you can see my principle in action that we've been talking about. Okay. All right. So here, remember I said the reason why I don't like to take the
The reason why I don't like to take these trades where I'm getting in on a retrace is because you save money, you save losers by waiting for the buy stop, right? So here's a kangaroo tail right here. See this blue bar right here? That's a kangaroo tail, and you can see it actually printed where we recently saw some nice support, or over here some resistance and some support right here. So it actually printed in a pretty nice spot. In fact, I could probably draw a line there, but the point is right about here. See? Whoops. I'm not very good with these charts because I don't use them that often, but it's a broker's chart. But basically, I'm looking at something about right about here. Okay? So this blue chart, this blue 6-hour oil bar printed, and that was on at the end of last week. And so I thought, cool, on Monday, or Sunday, depending on where you are, I'm thinking, well, I might want to take a trade on this one, right? Let me zoom in even more so you can see it. So I said, I'll put my buy style up here and I'll wait. And guess what happened? The market just fell like a brick. It went down to the zone and then it fell even further. And so it never triggered my buy stop. Now what would have happened if I decided to get on this oil kangaroo tail early? What would have happened? Well, it would have definitely taken a loss, right? And that's why I do this. That's why I wait for the buy stop, because I'm going to avoid these losers. Now you can see the market actually made another baby kangaroo tail here, but the open and the close weren't inside the previous bar's range. So that one, unfortunately, didn't qualify, and then it rocketed back up. But I just wanted to show you this is the principle here. Now, while we're here, maybe we can look at the Kiwi. I put the buy stops like just a few pips. Chica, maybe like 5 pips or something like that, you know? Just like 5 pips, that's all. 5 pips or so beyond the high or the low. That's it. That's all you really have to do. I hope you guys have a really great week, and thank you so much for spending time. If you'd like the ebooks, it's Walter at FX Jake. If you'd like to see me next week, we'll see you. I think we're on next Wednesday, right, guys? So thank you very much, and thanks to FX Street, and I appreciate that everyone's taking time out of their day to be here. I look forward to seeing you next time. Maybe we'll look at a new trading strategy next time, okay? Thank you very much. Walter at FX Jake. Thanks, guys. Thank you very much. Take care, guys. Bye.